Okay, folks, welcome to the week ahead commentary. I'm going to apologize in advance if my voice is going. I'm coming down with a cold, so guaranteed within the next day or so it will be gone. So I'm going to try to keep this as brief as possible and touch upon the major points that matter. We're well into earnings season. We have a good feel for how earnings are shaking out. So the attention of the markets will now begin to shift back to economic data. But before we really get all excited about the economic data, which was fairly good last week, with the exception of inflation, we'll talk about that. But the key is to get through Tuesday. And we're not going to talk about who I hope wins, who I hope loses. All that matters is what will happen with the market if we see a turnover of the House of Representatives and what will happen to the US dollar. Now, if the House flips to Democrat, you can bet your bottom dollar that there will be increased deficit spending. Why? It's because to cut any deal with Congress, the president will need to increase spending on social welfare projects. I don't make it up. That's just the way it is. Where will it come from? It will come from defense, and you'll see an increased amount of deficit spending. What will that mean for the dollar? It won't be good. So before we get to the charts, let's talk about the economic data from last week. Core inflation came in twice as hot as what was expected at the core, meaning ex food and energy. It came in as expected on the overall number. So what does this mean? Absent food, absent energy. Inflation at the core is rising quickly. Consumer confidence was very strong. The ADP employment report beat, and that matched up with a big beat on non-farm payrolls. The unemployment rate stayed the same. Now, to the trade deficit, we saw a beat. So the debt, the spread between what we are importing versus what we are exporting continues to widen. And I think we had the biggest trade deficit with China in history, despite the trade wars. Now, what I suspect will happen after the midterm elections is that we will get a deal with the Chinese. I think the Chinese are just holding out to see who wins the midterm elections. And that should be good for the markets. Let's get to the charts. All right, the 30-year bond price. So far this month, we are down yet again. No new monthly high, but no new monthly low yet. But the breakdown in the bond market, the price of our bonds, continues very weak. We continue to see weakness on stochastics. Now, what does this mean for yields? It means that yields are poised for a massive breakout, folks. And I don't mean simply week over week. I'm talking multi-year highs within the next week or so. Last week, we saw a major bullish reversal on the 10-year yield. We are poised now to break out above 3.23. We're 1 bip away from, that's basis point, 1 bip away from multi-year highs, or meeting multi-year highs, 2 bips away from multi-year highs. This is significant. I don't think the markets are going to be able to withstand this type of pressure. And as for the consumer, forget about them. They have a ton of debt. Money's becoming tighter. And you're going to see banks begin to rein in their lending, meaning their underwriting practices are going to get tougher. They're going to cut back on rolling over, the ability of the consumer to roll over teaser rates, and they're going to cut back on limits. That will hurt the consumer because they're not earning as much. Inflation is on the rise, and they're going to lose that line of credit that they've been relying upon from the banks. And also, you could say that, if they can go to the bank and get a home equity loan and consolidate their debts and heck make it a tax write-off. No, that's done. With the recent tax reform bill, They can't do that anymore. They can get a homeowner loan, but you cannot write off that interest any longer. So yields appear poised to move higher. The U.S. dollar, a bullish key reversal last week. Very strong stuff. What's shocking, though, is that gold rallied with it. We'll talk about the price of gold in a moment. The VIX, very bearish price action last week. We talked about this, all the chopping action. We knew it was going to happen. We'll probably get a pullback this week, another retest of 18. Let's look for a bullish reversal bar to recapture 18 by the end of the week. If it fails and we close down below it, we'll come down to the next support level at 16 or 1450, thereabouts. But I think that we're going to get a bias to the upside in the market, and at worst, a sideways consolidation. What the fly in the ointment will be is a big breakout on yields. The Dow Transports, they recaptured support, actually two support levels last week. We closed off the highs of the week. We're at resistance. Volume was good. So the transports looking good. They're not a buy yet. Too much technical damage. We need to sit, watch, and wait. The Dow Industrials weekly chart, very similar. We rallied to close off the lows of the week. We closed below support at 25,500. Sellers were up there, as noted by this wick, topping tail, shadow, whatever you want to call it. Volume was very good. The Dow Industrials daily chart, this is what we want to do. We want to update this because on Friday, the market sent us a signal. Here is our new upper band of resistance. And if we lean into it yet again, we may be shorting some of the larger companies out there in the Dow Jones Industrial Average. Now, what happens if we do not rally back to try to retest the support level? Well, we could short on a break below 25,000. And then add to that short on a breakdown below recent lows. So let's get our crayons out and draw our lines in the sand. So this is what we're going to be watching for. Do we break out? Or do we roll over and break down to new lower lows? That will dictate which way we're going to trade this market. Both lines on Stokes are rising, both above 50. That's good stuff. RSI stalled out here. So it's too early to go shorting the market. NASDAQ Composite weekly chart, a bullish reversal bar. Resistance at 7,400 to 7,450. What was the high last week? 7,466. So we had sellers up there. We found resistance at the rising 50-period moving average in blue. Volume was good to the downside. The S&P 500 weekly chart. All these charts are very similar of the indexes, right? They all reversed off of the lows of the week last week. They rallied. They closed fairly strong, but they also closed off their highs. So you still have some institutional sellers above. Volume, very high. IWM, the small caps, better than the other charts so far, right? Because while we closed slightly off the highs, we closed with more conviction, buy longs. So were I a trader here looking to get long of the market, which I am, I would be looking to get back long of the TNA on a new weekly high. Volume was very good. The micro caps, excellent. Even better than the Russell 2000. So the micro caps are even looking more attractive than the large caps. They closed right at the highs of the week. And they closed above support. So really good stuff here on the small and micro caps. The semis, very similar to the large caps, meaning they reversed off the lows but well off the highs. So right now we're in a trading range. Healthcare, We closed well off the lows, but well off the highs. This is like a spinning top formation. It's a sign of indecision on the part of traders. Now, what I find disturbing is that, yeah, both lines on Stokes now trading down below 50. That could be negated with a Democratic win of the House of Representatives. But I'm going to caution, beware of any knee-jerk reaction by the market. Let's let the market settle down. Those sectors that will benefit, meaning healthcare, alternative energies, with a Democratic win, they may just be short-lived, because in reality, if the Dems win the House, they still don't have the Senate and they don't have the executive branch. And what they forecast is, rather than putting forward any type of policy, they're going to look to go to war with the president and try to impeach him. I don't know what kind of deals are going to become reality if they decide to take that aggressive path. So I think that any rally based upon a Democratic win in healthcare and in alternative energies may just be short-lived if, in fact, they decide to take the route of trying to impeach the president. Nothing's going to get done. Oil, weekly chart. We're breaking down here. Both Stokes and RSI down below the 50 level, which is bearish. We are really gaining some downside momentum, and we broke down and closed below support. So we have a failed breakout. This breakout here, which began in August, has now collapsed. Down volume rising. This is bad stuff. So any discussion of the alternative energy plays doing well in the face of a House of Representatives in Democratic hands, I'm not buying it. Not when you have oil in decline. Perhaps natural gas will continue to do well. I mean, they're coming out of a very long base, and plus now we are exporting natural gas. The IXC, the energy ETF weekly chart, we closed off the lows of the week last week, but traditionally the IXC will trade with oil. I don't know how confident I am about this support level holding unless, of course, oil gaps up next week and recaptures support. So while we had a fairly good week by closing off the lows, I don't know whether or not the selling is done here. I think that if we make a new weekly low on oil, it's going to be very difficult for the energy sector to hold on to support. And if we close down below this support level here in green, or at $33 per share, last week's lows, it's all over. We're going a lot lower. It'll be a failed breakout. So just be careful here. RSI, the breakout has failed, as we have seen also on price. The utilities, bearish reversal week last week. That makes sense because the 10-year yield, which is overlaid here in black, is rising and poised to break out. I would avoid the utilities right now. Of late, they have not been trading poorly relative to rising yields, which has been surprising, but that may end soon. We have a lot of topping action here on the utilities. So just be careful. Big down volume as well. Now this is interesting. Stokes maybe putting in a higher low here. But you can't just bet on this. You can't hope that we're going to get a double bottom setup and a higher low on Stokes. We need to see price begin to show signs of strength. And we're not there yet. We may get a pull back to 52 and then reverse off of that support level and close strong on the week. That would be good, but we're not going to know whether or not that occurs until late Friday afternoon. Then it becomes actionable. Right now, it's just pure speculation. So as I'm seeing it, I would expect more weakness on the utilities this coming week, at least in the front half. Housing, a reversal week last week. Rising yields are not going to help this sector. I think this is a dead cat bounce. I would avoid it. The biotechs, a reversal week. I'd like to see more consolidation, if not a retest of $50 per share. And then we'll look to buy the biotechs. I have a few biotech names that made it onto my screener. I didn't discuss them this week because the biotech sector as a whole is not poised for a breakout yet, and I'd rather focus on those individual names when I know the sector is ready for a breakout as well. but we'll watch them. The banks, they managed to recapture support last week, but ever so slightly. Volume was good. But we did close off the highs of the week. So we have resistance right here. All the way up and into $27 to $27.25 per share. So I don't see a trade here just yet. Gold. We closed down on the week last week, but relative to the dollar, it behaved fairly well. Now, we closed down below the 200 period moving average. I'm not loving this chart. We saw topping action the prior week. Last week, we closed down. Despite the fact we closed off the lows of the week, we couldn't close positive. So the jury is out here with gold. Now, Stokes are rising, which is good. They're above 50. Good stuff. That doesn't mean we can't get more consolidation with a bias to the downside this coming week. Now, in terms of positions, Nugget, a very good week last week. We closed right at the highs of the week. So very strong. Volume was outstanding. Let's check out a daily chart. RSI back above 50. Stokes beginning to level out here and rise. Nice consolidation Thursday and Friday. We digested Thursday's gap up on Friday. We held support. Volume was a bit weak on Friday. But I'll tell you, folks, if the Democrats win the House, you're probably going to see a very, very weak U.S. dollar in anticipation of additional deficit spending. Because despite their disagreements with the president, they will rubber stamp any social welfare program that he said puts forth. And you may be saying, he's not going to put forth any social welfare. He's not for it. If you have a Democratic House and he wants to get his legislation through, he will have to put forth or concede to some of their social welfare spending. That will put a nail in the coffin of the U.S. dollar. USLV, a nice week last week, but we closed off the highs of the week. I wanted to buy at the highs and on a breakout. We didn't get it. Good volume. But it remains a watch right now. We want to see a close above 68.90. Then we will buy USLV. EYES, Second Sight Medical Products. A really nice week last week. Remember that the micro-cap sector outperformed every other index last week. What sector is EYES in? The micro-cap sector. So we're going to remain long here. I want to add on a new weekly high, especially above the rising 50-period moving average. We're going to kick off focus stocks with a review of EDC. Now, EDC is the Emerging Markets ETF. Now, if the Dems win, as is expected, I don't know if it's going to be the truth or not, the reality, but we'll know on Tuesday evening. If they do win, I want to be a buyer of emerging markets. Why? Again, it goes back to deficit spending. You'll probably see the dollar weaken, and that will bode well for emerging markets, which are now half of where they were, more than half of where they were at their highs at the beginning of the year. Volume last week was very good. I think we're moving a lot higher here on emerging markets. Now let's move on to the TNA. This is the leveraged ETF. We traded to the long side. I think we're going to get some pressure here, folks. We have the 50-period moving average, which, absent an act of God, is going to cross down below the 200-period moving average. It's technically significant, and you're going to see traders sell stocks. That doesn't mean we're going to break down to new lower lows. Normally what occurs after this negative divergence is that you do get a rally. So the question then becomes, do we, and that rally usually doesn't last, do we pull back and put in a higher low? Do we retest prior lows or do we break down? That will be the answer or answers that will need to be asked and answered. Now, if we pull back and we put in a higher low and then we begin to break out above this upper band of resistance, well, then it's game on. But if we fail to hold support here and we break down, you want to avoid this like the plague because the small caps become a short. All right, extreme oversold stock, MDRX, daily chart, RSI 14.18. We gap down on Friday. Might we gap up early this week? In all probability, it's going to happen. This is a very well-known name. And when you take a look at the monthly chart, we did close down slightly below support. If we make a new low on the week, well, then we'll probably head down here to $8.84 to $7.61. That's where it becomes interesting as an extreme oversold trade. Not right now. So more to come here. Carriage Services, RSI 14.92. Very oversold. I think that these stocks are going to fail. They're going to roll over. That will not be good. I think we're probably going to go considerably lower. Now, while Friday's price action was okay, it was good. It was, in all probability, a dead cat bounce because this was unsustainable. This downward pressure on Thursday. So we may limp up here, but the Stokes being any measure of where we're probably headed, I think we're going to roll back over and break down. Now, we did come down and tap support at 1457. You can see that on a historical basis. This has been support in the past back in 2013. We are very, very oversold relative to the third standard deviation Bollinger Band and have been for the past couple of months. So what we'll be looking for here is more on a 2-hour chart, is the beginning of a sideways consolidation, a pullback and a retest. You can see that we're limping off the lows on a 2-hour basis. These Stokes imply that we're probably going to roll over and head lower. The question is, do we hold 1457? If it fails, it's going a lot lower. And we could head down to, wow, 1229 to $10.39. So a fairly significant drop if we break down and close below 1457. But I think we're going to get a rally first. The next chart up, Freight Car America Rail, RSI 13.40, a massive gap down last week, a continuation breakdown on Friday. Volume is huge. You can't fight these guys. This volume has to decrease. So if it rallies in the morning, don't go chasing it because you're going to see sellers move in. Now, the problem here is that on a quarterly basis, we have no historical support below. What does that mean? We need to wait on a daily basis for a bullish key reversal. We're not there yet. I would not chase this stock in the morning. Golar Liquid Natural Gas, love the setup here. We're breaking out on Stokes, breaking out on RSI. We broke out on price. I really like the setup here for GLNG. Daily chart, we broke out on Friday. Let's watch to see if this holds, maybe even get a retest of the breakout point, and then we'll look to buy Golar. This is not obviously an extreme oversold stock. It's a play on a weekly breakout, a longer-term swing trade. UGAZ, another natural gas play. Looks like we're going to set up here for a continuation breakout trade. Again, folks, this is a longer-term swing trade and a continuation breakout. Daily chart, looking good here. A bullish engulfing of Friday's move. I think we're moving higher very soon on natural gas. Stokes are rising. They didn't even come down to tap 20. They're already hooking up. RSI held in there. It's closing above 50. I think we're moving up very, very quickly here on natural gas. And honestly, I don't think it matters who controls Congress. Advanced Auto Parts weekly chart. We're looking for a continuation breakout above this upper band of resistance on a weekly basis. Great consolidation here. Good volume for the past 2 weeks. Now, on a daily basis, we are looking for a breakout before we buy above this upper band of resistance at, let's call it, 166 per share. Higher lows on Stokes. RSI is breaking out. Love the chart. So we have a lot of good plays for next week, folks. Let's show some patience. Remember, Tuesday is a big day. Let's not trade the knee-jerk reaction of the outcome of the elections. Let's let the market settle down. The first hours of trade on a knee-jerk reaction will be owned by the algorithms, not human beings. So let's be careful. Everybody have a profitable trading week. Enjoy the remainder of your Sunday. If you have any questions, shoot me an email, and I'll talk to you soon.